Hey, welcome back. In today's episode, I'm going to cover a few other non-Bitcoin related news that I've been seeing. I'm going to be covering things like the Fed actually contemplating easing its own restrictions on staff's personal crypto investments. Also going to be talking about crypto hackers. There's increasing momentum now on them targeting the exploits of RWA coin projects. Also going to be covering the actual growth appeal and potential. There's a huge multi-trillion dollar estimate on real world asset tokenization industry and its use cases. And finally, I want to wrap on a brand new concept that I've come across, which is DeFi looping. So let's start off with the first news on the Fed, where the top Fed officials are calling for easing restrictions on staff's personal crypto investments on grounds to enable them to better understand blockchain technology. So it's like a completely 180 U-turn on the predecessing US administration under Biden, where they're very hawkish anti-crypto on the against the industry itself. So now, ever since the arrival of Trump administration team, they're now taking a U-turn where they're starting to bring in more open-mindedness on embracing this blockchain technology, even for its own central government agencies, which I think is a good thing. Anything that would help open up the minds of people, government agencies, institutions, to enable them to explore and better understand what is the appeal, what are the actual traction on blockchain, how it can best serve their interest, as well as at a national level. I think it's a great idea for personal public sector staff or government agency officials and employees to start, owning a little bit of crypto, just to enable them to play around with it, because only by doing so will they get a better understanding. So they need to get their hands dirty, and I think it's a good thing. So from an ethics standpoint, I think it's a great way to them to achieve that level of understanding, because blockchain technology, as was the internet back in the 90s, is it's the most disruptive technology together with AI. So between AI and blockchain are the major disruptors in the 21st century digital economy. Now, the next news that I want to talk about is what really alarms me the most is crypto hackers are now turning their attention to exploiting RWA coin projects, exposing those security flaws in a new and different way. So it's like a new wave in how they perform or exploit these cybersecurity risks. Now, you might have heard in a few of my other videos that there's going to be a growing expectation once the Clarity Act becomes ratified finally. I think the ball is on the court of the US House of Representatives just to finalize that Clarity Act. The Clarity Act is meant to set a level playing field on how the US will govern the rest of the digital asset tokens in the country. We've already got the Genius Act, which looks specifically on how to govern stablecoins with the private issuers of those, so Tether, Circle, and the like. Now, the Clarity Act will set the stage for the rest of the digital asset token. That's what we're waiting for. So, once that happens, it seems like a logical progression for the crypto hackers to now turn their attention on the RWA tokens, which will be governed under the Clarity Act in the US. So this is no surprise at all that this is like a line-up activity for them to start, beefing up their skill set, their hacking skill set, to target those digital asset investors. And I have set up a separate podcast which is called Crypto Vault, where I've actually disclosed, those unfortunate stories, sad stories of the elderly, the vulnerable, even the most astute young digital asset investors. We've all fallen prey in one shape or another under the guises of these crypto hacking organizations, scamming organizations. So this is a growing threat, and I think once the Clarity Act is ratified, there's going to be a growing expectations for the fintech players who are going to be responsible for launching these RWA coin projects to start issuing those SOC certification reports. What are SOC certification reports? You can treat them as quality reports where the fintech players need to disclose things like the robustness of their internal controls, how well they govern the life cycle creation of smart contracts, how frequent they do their own testing, both from an internal and external perspective. I used to be a big forwarder to myself, and I've actually have issued these SOC reports. So I think the expectation is once we have the Clarity Act done and dusted, there's going to be expectation for these fintech players to include budget line items every year to cover the issuance of these SOC reports on an annual basis, because it's going to provide full disclosure and transparency on the robustness of their internal controls that govern these RWA coin projects. So this is something that it's just going to be an expectation for them to do in order to become more lawful and more recognized, and it's a public duty. It's like it's no different from how a publicly registered company issues its quarterly financial reports. Well, this is looking at it from an internal control quality perspective. So this is something that just have to do in order to weed out the boys from the men. That's really what it's all about, and we need it in order to mature the crypto industry and to bring the capital wealth, which is ultimately what we're most concerned about, from TradeFi into the RWA tokenization space. And one of the ways to do it is issuing the SOC quality reports. So this is a good news for investors, as well as for the fintech players as well. Also, I want to talk about the actual appeal of the RWA tokenization industry. I think the RWA is now targeting a $400 trillion TradeFi market, purely because there's a lot of appeal, as I said before, and it underscores the potential growth runway for RWA tokenization. There's several use cases that justifies this growth ambition that they have, and I've covered this extensively in many of my videos. I've set up a separate podcast called RWA Revolution, which covers the specific new launches of RWA coin project, which I would encourage you to subscribe and watch some of those videos when you have time. But just a reminder, what are the top use cases, RWA use cases that I've been seeing? There's two main use cases that we've seen at the moment. The first one is to do with tokenized treasury bills on chain, like US treasury bills. Why is that? Why is such an important use case? Well, we all know that governments are going to continue to print money, going to continue to issue bonds to cover debt, to get money from the debt market, and that is the appeal of tokenized treasuries on the blockchain. They want to kind of attract additional investors, particularly digital asset investors, not just the bond investors, which is what is currently doing at the moment in TradeFi. What they want to do is make it more attractive and target additional investors, digital asset investors, of these tokenized US Treasury bills, but it could be other foreign Treasury bills, not just specific to the US. And they need that because they need to cover their, I think, over $35 trillion national debt through these tokenized US Treasury bills. So that is the top use case. And the one that immediately follows that is tokenized private credit. So it's like the other side of the coin. It's the same sort of philosophy of tokenized treasury. The only difference is we're tokenizing additional private credit or loans on chain between institutions lending, so institution to institutional lending, and retail loans, mortgages on chain. So tokenized private credit and tokenized treasuries are the top two RWA use cases that support this $400 trillion TradeFi market they're trying to target and exploit. But there are other additional use cases that we're seeing. We've got tokenized collectibles, so things like tokenizing football teams, soccer teams, basketball teams, even targeting fan clubs on the blockchain. We have tokenized fine art, like the Picasso paintings, and so on. So all of these are growing set of use cases, RWA use cases that will target, as I said before, the $400 trillion TradeFi market for RWAs. So this is a growing trend that we are seeing, and I would encourage you to tap into that RWA Revolution podcast series, where I regularly publish and disclose what is that next emerging RWA coin project that I'm seeing at the moment, because that's another fascination of mine, and this is something that I cover extensively in my YouTube channel. So I encourage you to watch into that. And this leads into my final piece around DeFi looping, which is a brand new concept which simply offers higher yields with transparent managed risk, which is set to become key in on-chain portfolios as tokenized as tokenized RWAs grow, bridging traditional and decentralized finance. So, what is DeFi looping? Let's take a simple example. If you begin, let's begin by depositing a yield-bearing asset like WEETH into a money market account, and then we borrow a closely related asset against it, like Ethereum, where we allocate the broad amount of ETH back into this yield-bearing version, which is WEETH. Apologies, there's some planes behind me. And once you've done that, so let me just replay on that because there's some background noise. So let's take the process of depositing a yield-bearing asset like WEETH into a money market account. We then borrow a closely related asset such as Ethereum, which we then allocate that borrowed amount, into the same WEETH yield-bearing staking version, and then we use that as collateral, and then we continue to redeposit that as collateral. So it's like it covers a full circle loop of the WETH/ETH pairing, which is in fact the predominant and most common pairing that we are seeing in the DeFi looping space. So this is quite interesting because why is there DeFi looping? There is a need for that? It makes sense because unfortunately most of the coin projects, particularly Bitcoin, which is not proof of stake, it's proof of work, there's that handicap that we have in that we are unable to generate yield from our Bitcoin holdings. So what is the best way to do that? Is through depositing some of our digital asset tokens onto a staking platform and use that as collateral, which the staking platforms can then subsequently borrow and loans off that. This is what DeFi looping is. As I said before, it's a specific type of use case of DeFi where they want to kind of generate higher rates of yield to customers depositing their, let's say, yield-bearing assets, as I just covered, WEETH, then using that as collateral to take out a loan on a closely related asset, Ethereum, and then actually including that amount, that borrowed amount, back into the yield-bearing asset, WEETH, and then you use that as collateral for the next set of borrowing, which then closes the loop, as I said before, the DeFi looping loop itself. So that is what DeFi looping is. It's a brand new concept. I have to confess, I'm not really familiar with it, but I'm looking through the concept. Seems it's a brand new concept and it's rather interesting. And we need to do further research just to understand what does it involve, what are the pairings that we've seen, because WEETH pairing is the common one at the moment, but there's going to be other pairings that are going to be falling under this DeFi looping approach. So there's a lot of movement that's going to happen in that space, DeFi looping space, and probably I'll cover a dedicated full-blown episode just to explain exactly what DeFi looping is about, because as I said, it's just a brand new concept at the moment. So that's all I'd like to cover in today's episode. If you have enjoyed it, please don't forget to hit the like button, to share the video to colleagues, friends and family, and if you haven't done so already, please subscribe to my channel, as I regularly publish videos such as these, anything to do with Bitcoin, real asset tokenization and the future of finance. So I'll see you next time.